estimating the impact of the oil price collapse, coupled, of course, with COVID-19 on Gulf economies?
I think that there is potential to underestimate it. There's potential to underestimate the impact on GDP growth around the world, and we've seen that with institutions like the IMF so far. But to be fair, there's a general consensus that these economies will shrink in the region of, non-oil GDP will shrink in the region of 4 to 5%, which is similar to what we're seeing around the world. The real impact and the real problem here, as I think you've already mentioned, is the fiscal problem, because so much of their revenue still comes from oil and gas. This is governments. And I think there is a potential to underestimate the impact of that, yes.
Walk us through this, Chris, because in terms of these job losses, we heard about 48 hours ago, Kareem, of course, has taken about 30% of their workforce and laid them off at this point. I asked Alan Bajani about that. Listen into what he had to say, and then I want to get your take on how bad you think this is going to be for the UAE specifically.
Unfortunately, the reality is that we have a global slowdown. And that slowdown actually will go moving almost into a depression. So that's companies that do not have the ability to, or the resilience to go through that. And you're going to see big names actually being hit and announcing that actually they need to do things that was unthinkable, I think, a few months back.
Chris, has he got it right about that? Are we going to see some more massive layoffs in this part of the world?
It's likely to some extent, but the real problem in this part of the world is that we don't really see unemployment, or we certainly don't see it in the UAE. What we see is the population shrinking, because most of the people who get laid off are obviously going to be expats. Expats make up, let's say, 85% of the UAE population. So when they do get laid off, they'll leave the country, and that obviously causes more economic pain here. You think about real estate markets. I think what we have seen and what I'm aware of is that a lot of companies are furloughing employees. And of course, that at least has the benefit of meaning that they stay in the country until these businesses reopen. But yes, of course, the UAE isn't going to be immune from all the major problems that are going on around the world. And in many, as I said, in many senses, the fact that population can shrink makes things even more difficult. How do you bring people back quickly? There's a real problem.
What's the solution here, do you think, to creating a more stable environment in terms of the UAE specifically? Is that a corporate tax? What is it that you think would lead to sort of the organic growth of this economy away from, the government-based companies, like in the real estate sector, like the banks?
Well, that's the trillion-dollar question, isn't it? There are a few things. Obviously, we've seen sovereign wealth funds like Mubadala use a lot of those ultimately oil revenues to invest in the country. And you can see, for instance, that Abu Dhabi is a very different place to somewhere like Kuwait, where they have made real strides to diversify the economy away from oil. Obviously, another issue is over visas and ensuring that people, can stay longer to find new jobs. And I think we've already seen countries in the region, the UAE, start to address that. And I suspect that they're going to be looking more urgently at that problem, particularly because we've already had a few years where real estate markets have done so badly. I think that we're looking at population shrinkage and thinking maybe there's a way to broaden the kind of residency status that expats have. It's very important.
I want to take things a little bit more broader right now, because we've been talking throughout the course of the show about rising tensions between the United States and China, of course, over the origins of coronavirus, fears that once we're out of this COVID-19 situation, we are going to see a re-escalation in Sino-US tensions. How worrying is that from your point of view, and what would the implications be for the Gulf?
Well, I think it's worrying for me. I think it's worrying for everyone, but immediate sort of economic implications, of course, is that we're going to see this kind of breaking up of these supply chains. And of course, supply chains have meant that it's about the theory of trade, isn't it? We can all buy things cheaper because we specialize in what we do best. And if you start to break up those supply chains, then clearly the cost of production goes up. And if the cost of production goes up, that leads to more economic inefficiency and slower demand growth. And that's obviously going to weigh heavily on the oil price going forward. And that's the thing about this region. I mean, it's still so dependent on oil prices. And if we see lower growth globally, well, you're going to see lower trends in demand. And that really means that the kind of fiscal controls that we've seen in this region in the last few years are just going to extend further into the future, which puts a cap on economic growth.
Chris, I'm afraid we're going to have to leave it there. Great stuff as always. Thanks so much for getting up early for us this morning. Chris Payne of Peninsula Real Estate. Thanks again.